Welcome everyone to another episode of Small Business Treasury. And today I want to talk about how your QuickBooks ERP system integrates perfectly with your treasury systems, which is your banking platforms. Okay, my name is Frank Molina. I have over 10 years of corporate treasury experience. I created this channel specifically to help small business owners understand the importance of treasury and treasury practices, implementing good habits and good policies. And at the same time, I have experience dealing with QuickBooks and small businesses, independent contractors, and medium to large organizations. Now, the very entry level positions are for small and growing businesses. It's usually QuickBooks that is usually sufficient. As your organization grows, you will typically evolve into a more complex, more advanced ERP system, which keeps track of your accounting. Anyways, going back to today's topic of discussing the integration of your treasury systems, which is your banking platform, and your ERP system, which is most likely your QuickBooks, your Zero, your NetSuite. Those are the small entry level ERP systems used by small organizations. So the main difference between those two is one is an accounting software and the other one is a treasury platform. So your JP Morgan, your Chase, your Bank of America, that is your banking platform. That's where you can issue payments. That's where you can release ACH. That's where you can issue wires. That's where you can keep track of your checking balances. That's where you can make deposits, etc. But your ERP system, which is your accounting software, is what uses to track all of those transactions that occur during your banking activity. So those two work independently, but they should be working together in your organization. So you, as a founder, the C-suite, the CFO, the accountant, the head of finance, anybody who is around the accounting department within the organization, whether that's an independent contractor for your organization, outsourced, or someone in-house as a W-2, it's very important that you, as a founder and the CEO or the C-suite, are aware of the differences between those two platforms and how they come together. Okay, so going back to the main point is when you are issuing payments, you're going to do that through your banking platform. But when you're recording those transactions, you're going to do that in your ERP system. And it's very important that those two things are done in their independent areas, but at the same time come together when you're doing your reporting. So your ERP system, which is in this case, we'll use QuickBooks as the example, it has a feature where you can link your banking platform to the ERP system. So every time you use a transaction through your debit card or your checking account, it links it to the ERP and then records it as a transaction in QuickBooks. Now, you as the head of finance should be going in there and marking what type of transactions those are labeled to. Okay, so if it's a office supplies from Amazon, you need to be going in there as your bookkeeper to marking that transaction as office supplies. So that's where the difference between head of finance, bookkeeping, all these different roles that go into the accounting department of an organization and how they differ. Usually in smaller organizations, you're going to have an accounting team, a CFO, someone who's head of the accounting department to issue payments in the bank. That is separate from a bookkeeper who goes into your ERP system, looks at the already his past transactions and record those transactions in the ERP and posts them into the ERP. It posts it to the general ledger. That is the difference between those two positions and within your organization. Both of them could be outsourced as independent contractors. Usually the one that is outsourced the most common is the bookkeeper, because that position is usually very entry level. It could be done remotely. It could be done by giving access to a bookkeeper who is either domestically or internationally, someone who has experience or very entry level. That is up to you as the founder, the CEO, the business owner, to determine what type of level of experience you want someone to handle your books. Whether you want someone like me who has over 10 years of corporate treasury experience, or someone who's very entry level, maybe overseas, who does it from a third country like India, which is very common nowadays. Now, that level of detail and expertise and quality of work is going to reflect on the pricing. So keep that in mind as you continue to scale your organization. So those two systems work independently, but they come together as an entire organization, as an entire accounting department, as an entire finance structure within your organization. And typically, any businesses that's doing between 100,000, even less than that, solopreneurs who are independent contractors all the way to several millions of dollars are QuickBooks would be a good option for that, I would say. As you cross into the 10 million, 12 million, 15 million, I would recommend that you start using more advanced, complex ERP systems, but that's a different discussion for a different video. Right now, we're just comparing both of these independent products that you use within your organization and how they differ and how they come together whenever you're doing your reporting. Okay, so whenever you are doing your banking transactions, your head of finance or your CFO is the one who should be logging into the banking platform and issuing those payments. Now, I have plenty of videos in this channel discussing the importance of having good treasury habits to making sure that your business is not vulnerable to embezzlement, you are not being stolen from your employees, your CFO is not taking money or selling themselves money from the checking account, and making sure that you can implement dual approvals and dual functions when it comes to releasing payments within the banking platform. Okay. In addition to that, your ERP system should be tracking all of those transactions in real time. So your bookkeeper, your staff accountant, your in-house accountant, your in-house bookkeeper should be going in there daily, recording those transactions so it's not being delayed on a weekly, monthly, or quarterly basis. Okay. You want to make sure that your books are up to date so you can see real time, real data, what your revenue is, what your expenses are, where you need to cut, where you need to increase sales. Okay. In addition to that, keeping track of your expenses on an ongoing basis is also going to alert red flags if there's any in your banking platform. So making sure that your bookkeeper is bringing to attention some transactions that don't look familiar and presenting it to the board and saying, hey, this transaction looks awfully large. It doesn't look like we've done something in the past. Are you sure this is a legitimate transaction? It's very important that the bookkeeper is able to present that information to you on a timely basis, because if too much time goes by, then it may be very difficult to recover any funds if they were involved in fraudulent activities. Okay. In addition to that, your treasury habits that are heavily discussed in this channel, and I can answer any question that you may have if you send them to me. Your treasury habits also prevent fraudulent activity from occurring in your organization. That's the whole point of treasury habits and policies, is to make sure that you're protecting the capital, protecting the cash that you worked very difficult to earn and obtain, and making sure that everything is being done properly. You're following good habits, you're following good procedures, you're following good processes. And the whole point of my educational videos is to implement the treasury habits and policies that we use at billion-dollar organizations into your small business. That is the point of these educational videos. So we can go ahead and discuss them. We can implement them. A lot of these things you can do DIY. A lot of them you can hire a consultant to help you, advise you, and to navigate these things. You know, I have over 10 years of corporate treasury experience. I've seen it all. I've seen people attempting to steal money from these bank accounts. I've seen fraudulent ACH activities. I've seen fake vendor payments. All of these things that are targeted by criminals and thieves trying to target small to growing businesses. Okay. So it's very important that as you're evolving in your organization, you're implementing both good treasury habits and you're implementing good QuickBooks and ERP habits. Both of those things work independently from one another, but they come together within the organization. In addition to that, your bookkeeper should be going in there, reviewing these transactions, and then anytime you see activity that doesn't look normal, you want to make sure that you investigate it immediately. Because the sooner that you investigate it, the higher probability that you can recover those funds. You can contact the bank. You can reach out to them and say, hey, this activity isn't part of our business operations. I'm not sure what it's regarding. Can you please open a case and investigate it? If it's a wire transfer, unfortunately, it's very difficult to recover. If it's an ACH transfer that was caught within a few days of the incident, it's probability that the bank could recover and reverse those funds. But it just depends how quickly you move and how quickly you can go ahead and begin the investigation process with your bank. So your bookkeeper isn't responsible to implement policies and procedures. They aren't responsible for going in there and opening cases with the bank. A bookkeeper is an entry-level position. They're the ones who are just recording transactions, and they bring up to your attention anything that looks out of the ordinary. But it's your responsibility as the CEO, the CFO, the head of accounting, the C-suite, to look at those transactions on a daily basis, look at the general ledger, look at the profit and loss statement from QuickBooks, and look at anything that looks out of the ordinary. If you see a transaction that's for $15,000, $20,000 that you know you don't make payments in that quantity, then you should definitely be looking at it on a weekly basis, if not daily, to making sure that any of those transactions that are being reported by the bookkeeper that is bringing up to your attention. A good bookkeeper records transactions on a timely manner, and a good CFO, a good head of accounting, reviews those transactions to make sure everything is in order, nothing is out of the normal operations of the business. And if there is something out of the ordinary, you investigate it quickly, you discuss it with the CEO, and you bring your bankers involved to make sure everything is resolved in a timely manner. Okay, these two systems work together within your organization. That's part of running a business. Is you have to make sure that you have good ERP systems like QuickBooks that can record your transactions, and you have good treasury habits within your banking portal to making sure you are protecting the capital that is very difficult, that you've earned through difficult work and through hard labor, especially when you're growing your organization. A lot of this stuff needs to be monitored very, very closely. Treasury is not something that you should be looking at once a quarter or every 6 months. It should be something that you should be constantly improving, constantly seeking consulting, constantly speaking with your bankers to making sure that you're not exposed in an area. That is the important part of Treasury, because there's so many different ways that thieves and criminals are getting creative nowadays into attempting to steal those funds from a bank account, especially if your banking information has been leaked. Maybe you posted it somewhere online. Maybe someone took a picture of a check. Maybe one of your employees who cashed one of your checks sold the information on the black market. All of these things are possible ways in which thieves and criminals can get access to your bank account information from your business. And then if you don't have the proper treasury features in place, they can drain that account little by little or all at once. So keep that in mind. They work independently, but together they come together. And you have a good bookkeeper is going to record things timely. A good CFO is going to be able to review it within a daily or weekly basis, so they can present it to the founder and the CEO. Anyways, that's all for today's video. If you have any questions, put them in the comments, send me a message. You could call with me if you want to work with me one-on-one so we can discuss your particular situation, how I can help you. I've been doing consulting for quite a while now, and I'm actually doing bookkeeping now in addition to that. I have multiple years of experience where I can help you grow your business when it comes to managing your finances, managing your banking, managing your QuickBooks, and to see if we can help you protect the capital that you work very hard to get. That's all for today, and I'll see you on the next one.